Welcome, everyone. Thank you for joining us for today's Faith Invest webinar. My name is Catherine, and I'm delighted to be with you. A few housekeeping points as we gather. So we will be recording, or we are recording today's session, and we are sharing the recording afterwards with everyone who is registered, along with a short follow-up note. Some of you have already sent in some questions, and we believe that those questions certainly will be answered during our panel discussion. My colleague Pippa is going to add our Faith Invest disclaimer in the chat. Before we dive in, a very brief word about who we are. So Faith Invest is a UK-based charity that supports faith organizations all around the world to align their investments with their faith values. And we work across faith traditions and across geographies. So why are we running this session and why now? Earlier this year, as many of you are already aware, we published Good Intentions 2026, and that was a study of 275 faith investment policies from around the world. And we looked at how faith organizations actually put their values to work through their finances. One of the clearest findings was this, that faith organizations are really good at stating what they believe, but less confident about translating that belief into practice through their policy. And this may particularly apply to issues that are new, fast-moving, or technically complex. And as we know, artificial intelligence is perhaps the sharpest current example of that. We also know that faith communities have not been silent on AI. And over the past few years, the Vatican, Jewish, Muslim organizations and authorities, and many Protestant and Orthodox churches have all issued statements on what AI means for human dignity, for work, and for the environment and for the common good. And most recently, Pope Leo devoted his first encyclical entirely to safeguarding the human person in the age of artificial intelligence. And this is an issue, or we've already published a paper particularly on this. So the thinking is happening. Faith leaders are grappling with AI in principle. We want to connect AI as a theological and ethical question to AI as a practical investment question, and that's why we're here today. We're not going to solve this in the 50 minutes that we've allocated, but we do have three people with us who are thinking on this topic from three different vantage points, and I think the conversation will be genuinely useful. So let me introduce them briefly. Pippa is posting the full biographies in the chat, so I will keep this short. We have Barbara Redpath, who chairs the Church of England's Ethical Investment Advisory Group. We have Umar Suleiman, who is a board advisor to the UK Islamic Finance Council. Josh Zinner is CEO of the Interfaith Centre on Corporate Responsibility. And then moderating today is Dave Zellner, who is our executive chair here in Faith Invest. So Dave, I'm going to now hand this over to you for around 40 minutes of discussion. And then after that discussion, we'll take some questions from the audience. So over to you, Dave.
Thank you, Catherine. And hello, everyone. Good morning, good afternoon, good evening, wherever you are tuning in from. I am Dave Zellner. I chair Faith Invest. I've been involved with the organization since 2019. Let's get started with our panel. We have three themes that we're hoping to address during this panel. One is why faith investors should engage on issues around artificial intelligence. The second is to explore the risks that companies face in deploying AI and how they conflict with faith values. And then finally, what we want to talk about is what investors should do now. So we're going to start off with the panel by addressing what many faith-based asset owners still see AI as, which is essentially a technology story rather than a faith values or source of systemic risks. So, to the three panelists, I'd like to briefly explore why should issues surrounding AI be on the agenda of every faith investor today. And Barbara, I'd like to start with you. Yeah, should faith investors be among the authors of how AI develops, or are they just bystanders to it?
Well, thank you. I think, given what has already occurred so far in the development of AI, we are all largely bystanders to date. I'm not proud of that. I just think that's the case. As development has taken place with little consultation and done mostly by the developers for the developers in hopes of reaching something that the public will use. And if we are to become authors in any way, I believe it will only be by faith investors working together on the topic as a unified group. I think it's absolutely critical. But it's important to remember that many of the developers remain privately owned companies, which makes them more difficult to influence. For this reason, it's important to consider investment positions not just of the developers, but also the users who are paying increasing amounts of money to access these systems, and how they use it in pursuit of their own corporate goals has to be part of our influencing strategy. Ultimately, we can have as much or more influence by working with the customers of AI as we can with the developers directly. From the EIAG's perspective, we look not only at our AI advice, but also rely heavily on our human rights and environmental advice when we think about artificial intelligence. All are underpinned by key concepts of human flourishing and stewardship of God's creation.
So the key message here is we have little influence over the developers, but we have a lot of influence over the customers, and that's where the focus. So, Umair, I'd like to transition to you. Islamic finance starts by asking not just is this profitable, but is this permissible, and is it beneficial? So, what is it about AI specifically that a faith lens catches that a conventional secular ESG or ethics screen tends to miss?
So, thank you very much for having me. It's actually the focus on intent under a religious guidelines of the Sharia. We have what is called the higher aims of religious scripture, and these look at two things: what's called maslaha, which is public benefit, and mafsada, which is public harm. Conventional ESG screens are often retrospective. They at times they're checkbox exercises that focus on minimizing harm. So, for example, looking at carbon footprints or board diversity, reporting what's there. An Islamic faith lens is inherently prospective and teleological. That it asks the question, what is the ultimate purpose of this technology? It's with anything we do. Why are we doing it? What's the unintended consequences of it as well? If an AI system is optimized purely to maximize user screen time, for example, via outreach loops, or a standard ESG screen might score it highly on low carbon footprint, which is one way of looking at it. But through a faith lens, it immediately flags as something which is harmful to human well-being. So that faith lens kind of helps us to look at it from a more balanced perspective. And then there's also this element of active stewardship over passive screening. A faith lens inherently rejects moral passivity. It catches the systemic shifts in wealth concentration and human exploitation, or it should be doing that, that conventional screens miss because they focus on individual corporate compliance rather than macro societal impact. And often we're unaware of the change until after it's happened. And we can see that with a lot of technology, but AI specifically, because of the rate of change, we have to be involved in it from the beginning.
Very good, thank you. So Josh, I'm going to transition to you. ICCR treats the good that AI can do as a given and sees its own job as accountability for those risks. Why is that reframing important, and why are faith investors well placed to hold that line?
Yeah, thanks, Dave. I guess just for starters, so for those that don't know ICCR, we're a coalition of over 300 institutional investors, and we are focused in the US and globally, and we're focused on engaging with corporations that our members are holding on their environmental and social impacts. I wouldn't say that we see that good in AI as a given, but I think we often, when I'm at the table on these conversations, they often drift towards, AI can do this for us and it can pull all this data and so many good things. It can cure diseases. And I think our position is let's all assume that's true. And there's many benefits that can and will come out of AI. But we see a critical focus for faith-based investors in focusing on the guardrails and the risks. And AI, as faith investors, we see this as a responsibility that we have. AI is driving the economy. It's here to stay. It's going to take over many aspects of our lives. All of that is a given with benefits, but we also know the substantial risks and unknowns are out there, and the build out is so swift and the enthusiasm so high that there's not enough investor attention to what the risks are. This includes the long-term existential risks, but also the risks that are right here and now. And it's our responsibility as faith-based investors. The core of our work is really focusing corporations on their impacts on people and communities and the planet first and foremost. And so this needs to be a top priority for faith investors, not just to talk about the long-term risks, but also to focus companies on the risks that are right in front of us, the risks to the future of work around autonomous weapons and surveillance, around privacy, around discrimination, issues that are of deep concern to us as faith-based investors. And this is sort of the baseline for the engagement that we do with companies.
So, Josh, you said that the risks are here and now, and you cited human flourishing and the risk of weapons, the use in weapons. You said there's not a resistance to deploying AI because you said that there are a lot of benefits to it. But what would you say is the top risk right now that investors need to focus on? The thing that's most important, most critical, that could have the biggest impact, systemic impact, if it's not immediately addressed.
Yeah, I mean, there are many. I would say again, our position is whether AI is here to stay, and as investors, we're going to be invested in AI in the development in the tech sector, and every industry is deploying AI in different ways. We're very focused and as investors in engaging with companies that are involved in the development of AI and in the deployment as well. I would point out that a key framework for our work is the UN Guiding Principles on Business and Human Rights in our engagement with companies, and that's critically important in engaging with the tech sector and with developers. Under the UN Guiding Principles, companies have a responsibility to respect human rights in their operations and supply chains. And under that, there's a human rights due diligence processes, which really drives human rights due diligence into core corporate governance, and it's asking companies to look at what their most salient human rights impacts are through a human rights impact assessment, and then taking steps to mitigate and address these risks. And that's a really, really important framework, above sort of all of the different issues of concern, a really important framework for engaging with companies, and particularly the developers, which are building out AI at just astronomically quickly, and really not looking carefully at what the potential risks are. So number one is really getting companies from a governance perspective to focus on risks. And then in terms of our membership, we do a lot of work on worker rights and deep concern about the future of work, about the gig economy, areas where AI impacts the workplace and where it's going. And the Pope's encyclical, which is a deep and important framework for all of us in engaging around AI, and certainly for our work, really puts also a focus on the workplace and the dignity of work versus the rush of AI to just replace jobs in the name of productivity. And that's an important balance that we're looking for. Obviously, also surveillance on autonomous weaponry is an area of deep concern, AI and warfare, also touched on by the encyclical. But I would say overall, the critical thing that we see as investors is engaging with companies on their human rights responsibilities and also their governance frameworks that they're building out in development, but also in the deployment of AI across all industries and making sure that they're setting up board level, management level accountability, looking at the risks, doing an assessment of risks, bringing expertise onto boards, and really understanding what the concerns are and risks to workers, communities, and the like. And that's really an important baseline for all of us as investors in our engagement.
Very good. Thank you. Thank you for that, Josh. Barbara, I want to come back to you and explore a bit the extent to which the Church of England thinks about divestment as a possible solution where companies are not addressing AI risks appropriately. So is there a parallel between AI and fossil fuels? Could it be that AI is the next fossil fuel scale test for investors? And is there a risk that we arrive at it too late, as many did with climate? Mute, 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 mute. Oh, you're on mute.
I'm back on. I'm on. I see why you draw the parallel, and I'll engage on that in a minute. But I think the analogy is more to the automobile, if I may, because it would have been great to influence the logic behind how AI models work and the moral values behind them, but I think it's a little late for that. But if you look at the automobile, it took some years after the invention to arrive at the rules of the road, the need for a driver's license, inspections for roadworthiness, pollution levels, let alone safety features like seat belts and airbags. I think with the speed of change we're working with in today's world, we don't have that luxury of time. We need to do it faster. We need to respond faster. As with tech and social media, it takes some time to realize both the good and the harms of any new tool. And you could argue also with fossil fuels, did it take us a while to actually begin that engagement? We weren't doing it in the 1920s when they were doing all the drilling. So here, I think it's really important that you recognize that when the Church of England does the invest and engage strategy, it is always with a series of targets to be achieved. And if those targets are not achieved, then you do talk about divestment, which is exactly what we did in the fossil fuel case. So I think the analogy is entirely fair with regards to investment. Again, though, I'd state that the problem is that we can't actually own some of those companies. We may own them through funds, but it's very hard for us to get ownership interests in the companies directly. And that's why some of it, much of our engagement goes through the use of them. On the other hand, and it's not me, it's the Archbishop of Canterbury, but I believe the Church of England, as well as the Catholic Church, has a convening power to be able to influence well beyond the ownership of its shares. And I think it's really important to use that as well, because we have traditionally had an influence beyond the monetary value of our investments.
So, Barbara, a follow-up I have for you, and if you're at liberty to discuss, has there been any discussion with the Church of England, the group that you deal with, about considerations of divestment of a company that you own that is deploying AI technology in a manner that is incompatible with the church's beliefs? Do you have an example that you can provide?
Yeah, it won't surprise you I can't give a named example, because each of our investors do their investment policy separately, and some of them name the companies they invest in and some do not. So I have to be very careful. But I would say that there is one particularly nasty piece of work who will remain nameless that I know for certain, having checked, that none of the three are invested in because of behaviors and issues that have gone on previously with that company. That's as much as I can say without divulging things I'm not allowed to do.
So I think what I hear you saying is that those investors have avoided the company because of their concern regarding the risks of that company's deployment of AI.
I think it would be about threefold, because I'd like to pay tribute to Josh's acknowledgement of the UN Principles on Human Rights. Our investors all follow those as well. So it could be that. It could be erratic governance that makes us uncomfortable. It could be the product themselves. In this case, it happens to be all
three. Very good. So, Mara, I'd like to come to you now, and I want to acknowledge an interesting point that was made in the chat. One of the participants said that divestment is critical. Only money talks and driving positive corporate behavior. And I understand that Islamic finance treats excessive uncertainty and opacity, garar, as grounds to walk away from a company. I mean, can you provide any examples where AI has crossed that line and your investors, those that you advise on Sharia compliance, have specifically avoided a company or actually divested of a company because of its AI practices?
Yeah, so I mean, just to help everyone understand, is like excessive uncertainty, ambiguity, where uh, either party to a transaction doesn't fully understand what they're transacting in or how they're transacting. So this is what we'd call the black box problem in gharar. In the Sharia, this is prohibited because a contract or a transaction, it must have clear, transparent terms to prevent exploitation. So many deep learning AI models, from what I've seen and spoken to experts about, operate as black boxes. Even their creators can't always explain how they reached a specific output, and they're constantly learning. So this becomes a problem when these models are used to determine, for example, creditworthiness, insurance premiums, or automated financial trading. Then we're introducing systemic, unquantifiable gharar into the economic system. That actually we don't know how these rules are actually being based, what they're derived from. And so then this also creates a moral hazard of automated accountability from a risk and compliance perspective, which is my day job, so to speak. If you can't audit the logic behind a decision, you can't actually establish accountability. A secular investor, they might accept this approach because at the end of the day, this opacity will give them high profits if they're happy with that, or yield them what they want. But as faith investors, we have to refuse to outsource moral responsibility to unaccountable black boxes. And for us, the clients that we've had, we've actually held back from investing in certain types of investments that have been quite popular. SpaceX, for one, that fails from a governance perspective anyway, without fully knowing how their decisions are made. Other than that, because the technology is changing so quickly, we always want to make sure that we are able to understand how they make money, where their profit is coming from. But that divorcing from just making money for the sake of making money in any means necessary, and actually how is it made? What decisions are being made? And to be very frank, Islamic finance, though it says these things principally, it's not always done in practice. And so this conversation is so welcome that we need to have more faith players speaking about this and really focusing on the unintended consequences, because whilst we may find people have a better standard of living, but at what cost? And so specifically in terms of investments, we've pulled back from SpaceX, which is a big one. But other than that, until we know more data, we've held back. We want to know more before we allow our capital to flow into any of these companies.
So you're saying at this point in time, You can't you can't tell the audience of a specific example of a company that had been previously held by Sharia compliant investors,
Yeah.
but that has subsequently been excluded because of issues surrounding AI. You gave SpaceX as an example that never entered portfolios because of issues, but
That's
there's no a specific company that's been identified as prohibited based upon their
yes.
applications. Josh, do you have any of your members reported to you that they've specifically excluded a company from their portfolio because of their AI practices? Mute, Josh.
Sorry about that. I can give an example. I think it's important to point out that divestment versus engagement is particularly tricky because so many of the companies, particularly around surveillance on autonomous weaponry and warfare, are technology companies, and this is dual use technology. And so many investors, all investors basically, are deeply invested in the tech sector, and portfolios are heavily dependent on the top tech companies. So there are particular challenges here under the UN guiding principles and the principles of many of our members as faith-based investors. There's a process. Engagement is emphasized, and through that process, there's an attempt to identify and assess risks and really use the leverage that we have as investors with the company to engage and to escalate that engagement if it's not successful, and then if there isn't progress, to consider a responsible exit. And this is a process that many of our members follow. I will say, again, very difficult with companies like Alphabet and Microsoft and Meta that have commercial uses, but also dual uses in military and surveillance. But one of the companies I can give an example is Palantir. One of our faith-based members just publicly divested from Palantir after going through an engagement process and determining that the company was so deeply entrenched in its ideological and business beliefs, and so committed to a business plan that was so at odds with the ethics and morals of that faith, and really the ethics and morals of all of us in our coalition, that they divested, and a number of our members are doing the same. So that's an example of one company. Although there's dual use there, the thrust of the company and the ideology and the framework of the company is such that it's clear that they're not interested in addressing the risks that their technology causes, and in fact are doubling down on a business plan which makes a lot of money off of surveillance and warfare. And so that's a much clearer case for divestment as an example.
Yeah, Palantir is very much entrenched in the defense industry. Now, you talked earlier, Josh, about a focus on the human impacts of AI. Can you provide the audience a couple of examples of companies that have been the main focus of some of your members in terms of engaging with those companies on issues of the human impact of AI?
Yeah, I mean, I would say certainly the big tech companies, that's a major focus, and engagement cuts across a number of areas. I named a couple of them, including the future of work, and how those companies are looking at the risks that their products and their practices and their business plan is causing towards workers in the future, and the ability to have a robust economy, the systemic risks that risks to the workforce causes. Again, we talked about surveillance and autonomous weaponry, and that's an area of deep concern. Surveillance and warfare, but also surveillance of the public, the privacy considerations there. Discrimination is a big concern, the impacts on people. We have a project in our health equity program on the impact of AI on the right to health. And an example is the use of AI to deny coverage to people through the health insurance, which is, again, garbage in, garbage out. The inputs, and again, so many of these issues were covered beautifully by Pope Leo in his encyclical. AI is not neutral. Technology is not neutral. It's created by people who feed in their biases, and so there's real risks of discrimination there. Risks to children. That's an area of deep concern to many of our members, especially as more and more youth and humans are interacting with AI chatbots and getting their information that way. Those are just some examples of engagements that are happening with companies in the tech sector, and other industries that are deploying AI in those ways that cause risks.
So yeah, you gave three really good examples there. One was the insurance industry and the extent to which they're using AI to deny claims. Two and three are related to the tech sector. One of which is the impact that AI has on jobs in the tech industry. And then two, it sounded like the social media platforms like Instagram and TikTok and Facebook and the like, how they use AI that could potentially have adverse impact on children.
And additionally, that the AI developers setting up chatbots, and that's a huge industry where children are interacting. That's an area of deep concern as faith-based investors. I mean, those are just a few. There are so many, and again, it's critical to keep the focus on the impact on people. And that's not always the case because everyone gets carried away with all the excitement about what AI can do. And again, really critical for us as faith-based investors to keep the focus on the flip side of that, what the risks are.
So Barbara, I want to turn back to you. Josh talked about several different industries where his members have been focused on in terms of engagement. What would you say in terms of engagement? And I should mention that I know that the Church of England's settled instinct is to engage rather than divest. But based upon what you've heard from Josh, what other areas are you focused on in terms of engaging companies? And to the extent that you can name specific companies that you're engaging with, I think that would be helpful to the audience.
I'm afraid, as I mentioned previously, I can't name specific companies because each of the three investors we advise have different investment policies. So what I would say about one wouldn't necessarily be true for the other two. I think the key thing is, and some of this Josh has covered well, is taking the moral responsibility for the outcomes. That's the key thing. So we need to constrain AI's use for evil. So we would look at responsibility for things like autonomous drones with no human intervention, development of murderous microbes, together with encouraging its ability to do and speed good drug development, arrest pandemics, and speed disaster recovery. So, but the problem is, the way legislation has been developed to date, we haven't given any of these companies responsibility for outcomes. It started with the tech companies. We've said it's the user, they're only a vehicle, and I think we have to stop that. And I will explain a little bit why, because our work is on human flourishing in all its form. So the first step to good governance is to consider whether and what tools help or hinder this. And that would be true for both developers and users that we're invested in. So if I may, I'm going to just quote briefly from our advice, which says, we expect both developers of AI and companies deploying and using AI in their operations to take moral responsibility for the additional risks associated with the systems. We look for both to promote human-centered design and development, accountability, and transparency.
So does the Church of England file shareholder resolutions?
Does it what? I'm sorry.
Do you file shareholder resolutions with companies?
We have advisors. We look at the advisors. We vote every one of our shares. Every one of them votes every one of their shares. They will usually vote And on key issues, it's often, funnily enough, it's often remuneration. We file them in the most extreme cases.
Okay.
We did a lot of filing in fossil fuels, but we
Okay.
don't. We tend to do filing of them only in key issues that we're focusing on. And even some of our voting will be very clearly related to the issues on which we're concentrating, because we have, despite our relatively large investment portfolio and a relatively large staffing on it compared to many faith investors, it's extremely difficult to engage on all subjects with all investors.
The reason why I asked you the question was I was going to ask if you actually filed a shareholder resolution related to AI, but it sounds like most of the resolutions you filed were related to climate. So I'll come to you, Josh, and ask a question. What would you say was the most visible attention-getting shareholder resolution that was filed this past season with a company regarding AI?
I would say, our members filed a series of resolutions with companies about AI governance related resolutions. But one topic that I failed to mention earlier that is getting a lot of attention and where we filed a number of resolutions is the data center issue. So we're doing a lot of work engaging with both the tech sector and the utility sector about the rapid build out of data centers. It's obviously an area of investor concern because of the massive, capital that's going into it. It's, in such a short time, but there's a lot of deep concerns for communities and the impact that data center build out is having on people and communities around energy use and cost, around water resources, around massive tax breaks that companies are getting that gut state budgets when they're not creating requisite number of jobs. And so these are issues in the AI build out and the data center build out that are causing direct impacts on people and communities. And I would say in the last proxy season that's the set of resolutions around AI that got the most attention, and another area where we're focused.
Can you think of any companies that those resolutions were filed with offhand?
Meta, Alphabet, Microsoft, all the big hyperscalers.
Absolutely.
Yeah.
Right. All right, so I want to move on to the third theme, which is what investors should do now. And so, Matt, I'll start with you. For an asset owner that's listening on this webinar who has not taken any action yet regarding AI risks, what would be the first step that you would tell them to take?
Oh, what's the first step? I mean, it's accountability, understanding the nature of the context, and then I'd say creating what good looks like for the firm. So this is having technical and operational gates. I think this is quite important. Taking our philosophical positions, taking our ideological positions, and how do you implement it operationally? So, number one, evaluating how the AI is built. So we need to understand this. Checking if the data sets that are used, are they audited for bias? I think this is quite important. Is there a human in the loop to safeguard for high stakes decisions? Then also adding an ethical and purpose gate. So sometimes and this is something we face with Islamic finance, that you have codified rules that make things quite black and white, which is easy. So we screen out for gambling, for intoxicant, anything in adult industry, arms, etc. So that's quite easy. But then the questions of morality are a lot harder. So how do you decide through these? And so we set up an ethics board within Wahid. And so any type of investment, how do you assess creating a model for this? So assessing the societal output of the model. Does this application promote human flourishing, or does it exploit human attention and vulnerabilities? And then the last thing is that board, how empowered are they? So they can make a decision. How is that implemented? Making sure that it has the right level of authority. So this is what I would do to create a unit that actually focuses on this and then implements it operationally.
So if if an investor, an asset owner did not have such an ethics board, you would suggest that they set up an ethics board or something similar to
That's
address
right.
these issues.
Yeah,
Uh,
absolutely.
okay, so Barbara, what would your recommendation be for a first step that people should take?
Well, the very first, a lot of them on this conference call have already done because they're listening to this. So that's a very good first step. I would say the second is to read Magnifica I can never say this, Humanitas, and possibly the EIAG's paper, though that's due for review next year. So it will be updated next year, given how fast things are taking. Because I think people have to take their own positions. People of different faiths have slightly different, in the same way that each of us as humans have different emphasis on the things that matter most to us. All investors have that. So within, they need to look at the aspects of it that matter most to them. That said, most of them have many fewer resources than the people on this call to do that work. So then, if you're investing with a faith-based investor, look at the rules they're using and decide which one you go into based on what they're saying they're going to do on the topic. Because most of our investors will be unitized investors. They may not be owning that share directly if they're small investors. So look at what your investment manager or fund manager is doing. And then, my next step, because I've taken advantage and given 2 steps, not one, is as we think about creating these coalitions of investors who are working together, find one that suits you and join it so that we can raise our voices together.
So, Josh, I'm going to come to you as a follow-up to something that Barbara said, which is many asset owners use asset managers and don't invest directly. So, among your members, what would you say is a best practice for engaging with your asset managers on issues surrounding AI? So, for the asset owners that are listening on this call that employ external asset managers, what would you recommend they say, and what type of conversations should they have with their asset managers to ensure that the asset managers are making decisions around investments that are ethical with regard to companies that deploy AI, and B, what companies can do to influence the companies in which they invest to be more responsible surrounding the issues of AI?
Thanks, Dave. That's a great question. Yeah, because of course, as faith-based investors, what is common across all of the faiths is a ethical, moral responsibility to take whatever steps we can to ensure that our investments are not causing harm for people and communities in the world. And as asset owners engaging with asset managers, this is really, really critical. More broadly, we're really working with our members to help them engage more robustly with their asset managers, our asset owner members to engage more robustly with their asset managers to make sure that the asset managers have investment philosophies, stewardship, proxy voting, and the rest that are in alignment with the faith and values of our members. As it pertains to AI, it's really critical to be engaging as an asset owner with your asset manager to make sure that they are asking the questions in their engagement with companies to ensure that they're aligned with your values on AI. So that includes such questions as, what is your policy for evaluating AI related resolutions? You don't want to hear that it's case by case or that they don't have a policy. You really want an asset manager who's thinking deeply about this. How does that asset manager in its stewardship identify an investment, identify AI material risks? How do you incorporate as an asset manager a human rights framework into your proxy voting? What types of AI proposals would you support? And you certainly don't want to hear that that's heavily weighted towards management. What AI expertise do you use as an asset manager to inform your voting and stewardship? How do you evaluate board oversight? These are the types of questions. So working with our members to ensure that they have the tools that they need to really be asking questions of asset managers. And we really have a responsibility as a community of faith-based asset owners to be pushing the asset managers to demand accountability, transparency, guardrails around the development and deployment of AI. It's this is the moment, and that's an urgent part of it. So I'm glad you raised that.
If I may, I'm going to interrupt because some asset managers are much more transparent than others than what they put on their own websites with respect to their ethical policies. And it's true that if you're a relatively large investor, you can get in there and talk to them. But if they're not disclosing, that's already a bad sign.
Well,
Yeah.
what you gave, Josh, is a really good list. And what we typically do after these webinars is we'll publish a summary of what transpired during the webinar. And I imagine that those list of questions that you provided will be a benefit to those that both participated in the webinar as well as those that get the summary afterwards. There's a question from the audience that I want to send to you, Josh, and it regards child safety online. And the question is, if you could ask Apple or Alphabet to do just one thing on child safety online and AI, what would that be?
Well, they have to have stronger controls. At the end of the day, they're making a lot of money off of and if we're talking about chatbots, it's really designing these tools for safety and not for profit, and putting in place clear guardrails to ensure that they can be additive without going too far. Those are very different types of guardrails for each product, but it's really critical as a baseline that child safety is the starting point and not profit.
Just to add, sorry to that, and I think without being cynical, absolutely what Josh just said, and the controls and the safeguarding shouldn't be used as a way of data capture for them to kind of then utilize or treat their children as future economic units, which was part of the discussion in the UK about banning social media, whereas everyone puts in their data and that data is then used and abused. So it's the unintended consequences of some of the actions that we take. We've got to look at it from all aspects. So Josh is absolutely right, and make sure that they are approaching it with good faith.
Very good, thanks for that. So I have one more question, but before I ask that, I want to go to Catherine because I haven't really been monitoring myself with detail the questions that have popped up in the chat. So Catherine, are there questions in the chat that you'd like to address to the panelists?
Yeah, there are a number of questions. I mean, a question came through early on how does the Church of England think about big tech tenants, since tenants are long-term relationships and the risks of big tech, including AI, are continually changing. Are there higher responsible investing standards for tenants, or are the standards similar across asset classes? Barbara, would you have a response to that question?
I do. As it happens, we just updated our advice on property. Otherwise, I wouldn't know the answer, but I've had to read it about 6 times in the last year. We ask tenants to apply the same investment policies for properties that are rented out that would be the case for the underlying asset. And then in addition to that, what often happens for us directly is if the Church of England is going to have a tenant, or Church of England owner is going to have a tenant, they can come to us and ask us to check it for them based on our existing advice and policies.
Excellent, thank you. Umar, I'm going to put this question to you. So, with the aggressive marketing of AI, we risk being trapped in total dependence on AI, which will allow companies to charge us whatever they want to pay back investors. Is this a moral and economic hazard?
Yeah, absolutely. If you don't have choice in something, then it's almost a form of monopoly. We would say it's duress. So And this is the problem. If we don't intervene now, it's only going to get worse. I've seen on a small scale, even normal advertising, how much more and more from marketing teams, the dependency on AI, let alone pricing models. So I would definitely say that's something that we should challenge. It is under duress, and it creates even more of that dependency, which is what really worries me. And I think we collectively need to challenge that dependency.
Thank you. Dave, I'm aware of time here and we've already gone over by 2 minutes and some of our panelists may need to leave. So if you do need to leave, please do so. So we might just wrap up now if that's okay. So thank you, Dave, and thank you to Barbara, Umar, and Josh for your time and your insights. I think that was a really rich conversation, and we are extremely grateful to all of you for a few closing notes. So just a reminder, we have published on this topic, including a post last week on why faith investors need to engage on the topic of AI, and then on AI governance for faith-based investors. So what all this means in terms of your investment policy. And those two posts, Pippa's putting a link in the chat. They are quite practical focused. So you might find them really, really useful in terms of getting to the practical implications of this for your investment policy. If today's conversation has left you wondering whether your own investment policy would stand up to some of these questions and issues, that's something that we here in Faith Invest can help with. So as we mentioned during all our webinars, we do offer a formal assessment of your policy. It's free to faith-based organizations. We keep it confidential. And then we offer a clear roadmap for strengthening your policy. You can scan the QR code on the screen or go to faithinvest.org/IPG assessment. If you'd like to talk it through first with us, feel free to email us at info@faithinvest.org. Our next event is on Thursday, the 3rd of September. It's the final forum in the Good Intentions series. It will cover professional guidance, regular review and monitoring, and continuous improvement. So what does that mean? We're going to cover what you should expect from the advisors and the managers that you appoint, how you can check over time that your investments still match what your policy says, and how you keep that policy current as things change. So QR code on the screen, or you can register at faithinvest.org /events. Apologies that we've gone over time. I think it's reflective of how timely and significant this topic is, and I'm sure that we will revisit it at some point towards the end of the year. Thank you all for joining us. We will be in touch over the next number of days, and thank you again to our panel. All the best.